Hello, guys. Good evening. Welcome to Tech at Work. I'm here presenting my first video. Very excited. And in this video, we will cover in depth analysis of Bank Nifty and our predictions for Bank Nifty for the next coming week before we hit the budget announcement. So, again, there was some strong recovery in the market on Thursday before close of play. From 250 245 onwards, the market was slowly trying to break out from that consolidation zone, and finally it rallied a really big point. So let's get started. So we'll just cover on a daily time frame how Bank Nifty looks from a structural perspective, right? So as we all know, there was a major correction from 48,650 down to 44,500, and on Thursday it looked like we are going to slip even further down because that's how the premiums were spiked up on Thursday for the put. Any trade that you're taking in put f- in the last 7 8 days, you are ultimately turning out to be in profit. But Thursday was when we witnessed a very sharp recovery, right? So on a daily time frame, there's a pin bar candle right here, and we tried breaching the previous day's low, and somewhere this indicates a trap of the put buyers here, right? So just to give you an insight, 3,600 points retraced from the top, close to 4,000 points. And they say retailers are the last ones to join the party of the fall. So this entire move, I'm sure majority of the retailers might not have captured it because it happened all of a sudden, and it happened when we were kind of looking bullish in the zone. Never was our lower low or lower highs broken at any point of time. So we were going steadily, and then this gap down created the entire panic move, and here we are. So let's get more deeper into what I want to list out there for Monday. So given the recovery on Thursday, it's clearly an indication that there is some sort of buying pressure coming in at this range. So 44,500 is the range of interest. So what do I mean by range of interest? There is a lot of buyers active around this area despite the fall of 4,000 points. The buyers are not in a panic or not in a position where they will start looking at a bearish trends from this level onwards. And the reason why I say so, let's go back to daily time frame and just try to understand what has happened in the past around this level, right? So Bank Nifty all the way from 38,000 topped 46,247. That is 8,000 points rally in Bank Nifty. And we all know when Bank Nifty starts to rally, what kind of a momentum it provides on the top as well as while it's in a free fall. And here it formed a double top pattern and somewhere created an M pattern and executed all the way down to creating a low at 42,000, but never did it breach or come closer to 38,000. So somebody who's, you know, believed in Bank Nifty from 38,000 has never been challenged in a very long time, right? So moving on, this was the area of interest uh, in the past as well, which was 44 800 500, this zone, right? And if we further go closer, you will realize that there is a lot of consolidation that has happened in this zone before this up move ever came into existence. So, which means that somewhere 44,500 was a really, really strong resistance at one point in time. So each time market came around this level, never took support, rejected as a resistance, took a support here at 42,000, which is a perfect retracement from 46,000. And then all the way, there was a rally up to 48, almost 49,000. So there is a 7,000 point rally, 8,000 from here, 7,000 from here. Now, we could look at another rally which may take us over 50,000. It may happen in a week, may happen in 100 days, a month, but what we are more keen on looking at is what is our risk to reward at this point in time. So for risk, to understand the risk to reward, we have to understand the support and the resistances around the levels. And 44,500 being an important area of resistance at for a long period of time, finally when it has broken out and reaches that level, there is an element of respect that the market creates around that level, because it was always a resistance and we passed through fairly without any gap up onto this level, right? So if we closely look at it, we took a resistance and then we broke over that level without any. Ideally, when such a major resistance is broken, it's always ideal that the market comes back, retraces, and then goes back to making a newer high. However, in the case of Bank Nifty, since it broke out this level, there was a huge gap up of nearly 500 points, which led the market to rally all the way up without even retesting any of those previous swing lows or previous resistances. And in fact, to be honest, it was all profit booking in between and never a bear move. So here, this unhealthy way or unhealthy rally that has occurred in the market due to the election, in all honesty, I don't think there was a reason for a market to rally to 49,000, but I'm not going to judge, or it's not my analysis to make where the market should head, because end of the day the market knows it better, and we need to respect the direction of the market and be around that direction. If you end up trading in the opposite direction, we always know what are the consequences, especially in Bank Nifty, where you can have a daily moving candle of over 1,000 points. So if you end up in a wrong side, the premium, if there was an option, could go into negative too. So moving on. So this unhealthy gap up opening or non retest of this level made all the other support points. Ideally, this should have been a support line, but there was a gap down, just like the gap up here. There was a gap down that created this entire downstream of you know downfall of Bank Nifty, 3,666 points down. And this happened due to one major stock, which was HDFC. As soon as the results were announced, the market reacted this way. And to be honest, it's unfair that the entire indices, except for the mid cap, were you know taken a big hit because of the HDFC fall. And if you look at the HDFC chart, same story. But here, there is one interesting fact about HDFC that you may not necessarily see on the chart of Bank Nifty. So, Bank Nifty, this is a daily chart. where you see there is a lower low, a lower high, lower low, and a lower high. So on a Bank Nifty chart still looks bearish. However, if you look at the same chart on a HDFC, it is a bearish trend. It's dropped over close to 300 plus points, or let's round it up at 300 points. So 300 points movement is significant, and it has moved the indices really really low at its uh, you know lower stages, when the market was way back around this level in June, July of last year. So you can imagine we are 6 to 8 months behind in terms of the overall momentum, or the stage we are at on a Bank Nifty. And for HDFC, it's entirely again going back to the major support area, which is this region. So this is the area of interest for HDFC. Here, there was a lot of consolidation around this area before it made tried making a newer high, and this level has been retested. So this level has always been retested, and somewhere, right, it took a support here, and last time it was in this level, or in around this level, there was a huge rally upwards of close to same, almost 280 points, 270, 300 points from this support. And when this was acting as a support previously, support, right, and here there was a healthy support, but because there was a gap down, the market simply bypassed those levels at ease. I don't believe there was any retracement as well in any of the downfall move. There, it was a clear cut straight fall, straight fall, straight fall, never challenge. Now there is a concept, or a methodology that occurs in a trading, which is change of structure, change of character, and change of trend. These are your three friends. So you have to understand that if you have to survive in the market without being trapped, without being overrun by a big candle which will be in your opposite direction, it's always important that you have three or four confirmations of different indicators which will help you secure your trade or secure your position in much more safer, and your deployed funds are much safer than a trade without a confirmation. And what do I mean with confirmation? There are different tools. There is one beautiful tool called Super Trend. I'm sure you might have, you know, heard about this tool in various YouTube channels, or you might have heard it in different strategies that are deployed. Um, and and I personally am a strong believer of Super Trend, but you have to understand that Super Trend is one of those strategies. Can you rely on Super Trend 100% of the times? The answer is yes. But if we are able to set our stop losses in a very very strict manner, or in a manner that our losses are much lesser to the winning trades, and on a super trend, if somebody had taken a buy trade here, is miserably trapped, right? And do you think any of these stop losses might have triggered here? The answer is no. Because of the gap down, the stop losses never arrived. It just jumped down, and by the time they put this stop loss, we are already here, right? So that triggers a bunch of panic downtrend, and ultimately the market should have stopped its free fall somewhere here or here. But because there is a volume of change in price and the stop losses, there is a further panic and it ends up retracing to a much attractive level for a buyer who believes in this share, who believes in this price, and believes that he is getting that for a very low price. And this is the area of interest for a buyer. If any day the buyer gets the stock at 1392, less than 1400, it's a thumbs up from a buyer. So if you look at a daily channel, right, one candle from 1374 to 1455, that's almost a 80 point candle in a single day in HDFC. So somebody has bought so many shares of HDFC, which spiked this momentum. And if you try to look back, some of them happened here, similar candles. But then this was in the upward trend. When it happens at the bottom, there are a lot of times where, you know, a big bar candle at the bottom kind of creates a momentum towards the upside, right? This big bar. So somewhere you have to understand that the bigger players have been introduced in the market to make this buying at these levels. At least they know that it will come back to retrace to its 1550 level, because at some point it was an area of interest, right? So what we have to watch for Monday is, from the looks of it, HDFC Bank is going to open in a gap up, which also means that there will be an element of gap up in both Bank Nifty and Nifty. So Gift Nifty already looks positive. So in all likelihood, there will be a gap up. However, it is really difficult to, analyze or understand what kind of a point or a percentage there could be a gap up. But let's understand from a Monday situation, right? What happened on Thursday is there was a small change of structure, right? And you may not see it clearly on chart, but I would like to, support it with few, tools that help you identify such change of trends or change of characters or change of, you know overall trend in the market. So on a Thursday, lower low, lower high, lower low, no. There was no lower low here. However, there was a lower low here. Here, if you notice, this trend is valid downtrend. It tried breaking, however, it broke, but because the average closing is after the 3 p.m., the average closing is considered, the Bank Nifty closed around the 44,866 mark, right? So just understand that when this lower trend is ongoing in the market, this is a tool called RSI divergence. It's effective just like super trend. It gives you the second confirmation of the direction that you're trading in. Now keenly pay attention towards the RSI divergence chart here, right? I will try to mark the levels on the chart so that you understand what is the levels around the RSI divergence that I'm referring to. So on Thursday, this was our level, which was a flat line, is a flat line right here. Okay, so we will continue to draw the line around that so that we understand the trend. Now, there was a sharp downfall, but there was a gradual downfall in the RSI divergence. Now, here, if you notice, there is no lower low, lower high creations, but in RSI, what is the trend that you see? This is the trend. And does it any manner give you an indication that there was an uptrend or a change of character suddenly after 12:45? Probably. But your analysis will be incomplete without doing this on a 5 minutes. So all this while we were looking at a 15-minute chart. Now if you look at a 5-minute trend, which is generally an early indicator which gives you a buy or a sell uh, position, it gives you an early entry and sometimes sustainable and gets you bigger rewards. However, again, the stop losses must be in place. No tool, no strategy will give you 100% results. Here, if you look at the trend on a 5 minutes, it's lower high, lower low, low here. So, this low, please pay keen attention here. So, our daily low was somewhere around 44,557, which is right here. All right, which is right here. So I will just try to color it so that we don't miss out on understanding what the low was, the lowest point, and then we'll mark the lower lows so that we kind of understand where I'm headed from this analysis. So this is one low here, right? So here somewhere the RSI shows that it created its last low. However, on chart, it is not true. The last low was created somewhere around this range. Now, on chart, you see a lower high, lower low, lower high, and this was the point where it was supposed to create another lower low, which meant there was a proper price action structure to trap the retailers in taking a down move. However, in RSI, you see there was a higher high, lower low, and then there was a higher high pattern right here. This move kind of ignited this up move, and the trapped put buyers here probably averaged out, and then finally gave up, right? Because all these premiums input which were trending, right, this level right here from 44,856, or let's take it 44,800 and downwards, all premiums have become zero for the put, and all the premiums from 44,400 have spiked up to 5x, 10x, 15x's, right? So what we understand here is there is a heavy uh, put traders that purchased put option, buying put option, and got trapped. And why that would happen at an hourly chart, if you look at it, we'll just try to hide the super trend. We don't need more. We will just try to remove the RSI so that we look at a chart much better. Now, this was the day low, right? I will just mark this level high. So on a Thursday, if you look at the range, right, there is a huge range that was created in the market, right? Over 1500 points to be precise, or let's call it 1000 points, my bad, 1000 points here, right? So this 1000 points right here was one candle, 1 hour candle. And if you see, the market closed within this candle, which is a bullish candle. This is a very strong bullish candle from Bank Nifty, from 44,500 to 45,350. That's a huge move. 800 plus points of one candle in a matter of an hour, which means there is a buyer that is interested around this level. Now, when the buyer, now it depends on the buyer if they book profit here, book partial profit, wait for retracement, just see if this price is still attractive for the buyer, and when it tries to move, now this is where our retailers will be late, because as per price action, it broke the previous hourly high and went up. And now naturally, the trend looks upwards, but it traps the call buyers and goes into a downtrend. Here, this is the profit booking zone, because everybody knows that 44,500 is a major support, and we've seen an 800 point movement from last time. However, now in these strategies that we discuss across various YouTube channels, various knowledge centers, you generally or often heard them referring to one strategy in particular is mark the day high, mark the day low. If the day low is breached, or if the day high is breached, you enter the in that direction of the trade. And Thursday, exactly the same concept occurred. It breached. There was an hourly candle closing below the day low, which means the sellers are heavily dominating the market in and are interested in taking it further lower than 44,500. So that's where the interest of put buyers is high, right? And if we are watching YouTube channels, I'm sure everybody has resource to watching the different strategies that are working for retailers, that are not working for retailers. But one thing in common is this is a trap move, right? And often it's the retailers that are trapped around this range, because they are late to catch this, but not late to catch this. So when they've got this, there is entirely opposite direction movement that happens, triggering all the stop losses of the weak sellers here. So in short, what Monday looks like is, from Dow Jones, we have Bank Nifty looks positive. At least it's not in negative. So there is a 40 point uh, day on day growth in the index Dow Jones futures, and it's possibly consolidating over the 38,000 mark. And HDFC looks promising. Now, one interesting fact about HDFC: this is a last 5 day chart. I'm not going to uh, take in a lot of time on this stock. However, if you look at its low, is 53 dollars and 54 cents, and then it's at a 56.61. Although it's just a $3 move, $3 is huge. And $3 is enough to shake up the market, right? So buyers think it's interesting at this price. I've already entered. And there's another data point that I would like to share, why I strongly feel that Bank Nifty is kind of in its retracement zone to challenge these sellers. So immediate sellers would be the the most recent ones, which would be here around this range. This sellers will be trapped as soon as there is a gap up. So Monday would be interesting before the budget. It looks like we may be in for a W, but we may not complete the W. We could take a rejection from here. I'm not ascertaining that the market would be upwards or downwards. It's just my analysis based the different indicators that I've used. And one more interesting fact that I would like to share with you is the order book. And if you notice, Bank Nifty, the most heavy components of Bank Nifty are ICICI Bank and HDFC Bank, right? And somebody just bought 266,000 shares of ICICI Bank, over 220,000 shares of SBI, IndusInd Bank of over 130,000, and HDFC Bank of over 55,000 shares. Although the HDFC Bank looks on a lower level, however, you have to consider this buying has already happened. So somebody has already bought the dips, has taken it to one level. They probably bought another dip around this range. I think this is the range. And if you enter into a Fibonacci retracement, right? So it will give you all your targets. So be patient while you trade. Just make sure whatever trades that you take are organized in a way that you get better rewards for your investment. And with that, I would just like to remind you that I'm not SEBI registered, financial advisor. So if you are entering into a trade or you are considering investment, please make sure that you speak to your financial advisor who can guide you. Make sure that you don't end up into a scheme which could be hazardous to your investment or to your hard-earned money. So please, make sure that you follow stop losses at all times whenever you're trading. Make sure you are trading responsibly, not trading for the day, but trading to survive in the market, to see all sorts of movements in Bank Nifty and Nifty and all the other indexes that you're interested in. But for that, we need to survive. So take it one day at a time. But if you are finding a very nice risk to reward ratio, which in this case looks like, because there are several supports right underneath. So from a seller perspective, you know I would not like to take the market further down. Rather, I would test a little bit of sellers on top, kick them out if they are retailers, and then go down further if I have to, or just fill this gap in at least, right? So the gaps will be filled in. As you know, this gap has been filled now. So the previous swing from 44,500 all the way to 49,000, almost, that gap has finally been filled and has consolidated beautifully around this level. So watch out for Bank Nifty on Monday. It looks like a pretty exciting and an interesting week next week for Bank Nifty, because every week there is a huge move in Bank Nifty. So from 16th to the last trading day, that's 25th, in 9 days we have traveled over 3,000 points. So that's not small at by any means. And it's really important that we are able to catch a portion of these trades, and that only happens if your risk to reward is in place and you take those small stop losses wherever you see that you know your trade is in a wrong direction. You take a 100 rupee lot, 200 rupee lot, whatever lot, but set a stop loss that will actually help you kind of give that peace of mind that if the trade is going in a wrong direction, you are at a calculated loss rather than unlimited loss. And if you keep waiting, the market can bring you nowhere. So there's a famous saying, it's not the money that you have, or it's not how much you have, it's about how much you can afford to lose in a stock market. And if you are in a losing streak, you can be zero to hero for a put, and hero to zero for a call holder, right? So it's always the trend. So always try to understand if there is a change of structure anywhere at any time, so that you understand that there is a change in trend. So higher high, higher lows, these concepts continue to be the favorite. Now all you have to do is make sure that this level around, I would take a 30-40 point leverage around this. Wouldn't trade in this range because it's a highly volatile range. Never really took support, never really faced resistance. So this area is a trap somewhere. So if it's a free for all from top, I would not trade for rejection, or I wouldn't go aggressive on a rejection here. Rather, I would see if my risk to reward is better on top. On that note, I would like to conclude this Bank Nifty analysis for today. I hope you guys liked it. And if you are new to the channel, like I am, I hope you subscribe and keep watching out for more content. And it's my promise to each and every one of you watching it right here, spending a quality time of yours in listening to me patiently, is I will continue to make my content even better, more knowledgeable insights around the risk to rewards, and get you different strategies around 3 or 4 confirmations which will help you be in a winning trade than in a losing trade. So that's my promise to you. And please don't forget to like, and most importantly, because it's my first video, I would like you to kindly pin your comments around what I could change, what I could improve, what I could include in all these sessions that I'm going to continue from here on. And if there is any particular chart apart from the indices that you would like me to kind of analyze and give you my fair thoughts on, and if I receive multiple requests around those, I'm happy to spend my time around it. So keep watching out for more content. Your love is what all I need, and ultimately, I will show my love with the content that I create for you. So on that note, happy Republic Day once again. Thank you for watching, and have a great